What's up, guys? Chris Rivera here, aka the ECOM accountant. Hope everyone is doing well. We are going to cover sales taxes in today's discussion. Main reason is a lot of our sellers have received one of these two screenshots, and we've been getting flooded with questions, both from our clients and our followers. So we want to make sure that we discuss this so that you have a thorough understanding of how sales taxes should affect you and your business. Be sure to watch this video in its entirety because I'm going to go from start to finish, from what are sales taxes all the way to my honest advice to how to implement sales tax processes in your business. So in terms of topics, the order that we're going to go through is 1, what are sales taxes? 2, where do I need to comply with sales taxes? 3, we are going to take a look at this screenshot so you can be able to understand what it means for you and your business, because chances are if you're a Shopify seller, you've received this notification as well. 4, we're gonna cover what your risk really is and talk about risk-based approach. And then lastly, we're gonna talk about my advice and what we do with our clients and just be brutally honest in terms of how tax compliance should be considered in your business. Okay, so topic 1, we are going to cover what are sales taxes, and we're gonna go over a very elementary example because it's a very confusing topic. So, picture a time you walked into Macy's, right, or any clothing store. You see a t-shirt you like on the rack and the tag says $20. Great, so you take the shirt, go to the checkout counter, try to slip them a $20 bill.
What the hell is this?
You can't buy the shirt. Why? Because of sales taxes. So let's say as the customer, you're not paying $20, you're paying $21.50. $20 is the cost of the shirt and $1.50 is sales taxes. Now, as the store owner, $20 is your revenue, so that's income you take in, it's subject to income taxes, so on and so forth. But $1.50 is sales taxes. Now, the $1.50 is not the store's money. The store is obligated to take that $1.50 and pay it in to the state or local tax jurisdiction that they're located in. So it's easy to understand in that example because it's a physical location, right? So if you walk into a Macy's in Wyoming, right, you are paying sales taxes for a local tax jurisdiction in Wyoming. So that Wyoming Macy's is obligated to collect Wyoming sales taxes and pay into the state of Wyoming whatever the local sales tax is, basically. Now, how does this apply to online sellers? It's a very difficult answer, but I'm gonna water it down to make it very, very simple because every state has their own rules, but there is similarities in terms of their treatment. For most tax jurisdictions, sales taxes is a destination-based tax, which means wherever you're shipping a product is where you have sales tax risk. Now, that can be a very scary thing to hear as an online seller because you can be based anywhere in the US or abroad and be shipping all over the place in the US. So for example, if you are a Wyoming-based online seller, an e-commerce entrepreneur, you can spend $500 a day and have sales all over the country and you're shipping products all over the country. Now this applies if you're a drop shipper, if you do US fulfillment, if you have a warehouse in the US, 3PL, etc. You can have sales tax risk in many jurisdictions. Okay, so we are going to jump into topic 2 here, and that is where do I have to comply with sales taxes? Now, again, this is a super watered down version because every state has their own rules. If you want the technical answer for your business, if you need the absolute answer, you're going to have to do a NEXUS study to check the rules for each and every state. But what we're going to do here is simplify the rules because most states more or less have similar or the same rules. So where do I need to comply with sales taxes? There are 2 key concepts that you have to understand here. The first concept is physical nexus. The second one is economic nexus. Now, what does nexus mean? Nexus means presence. Where does your business have a presence? So physical nexus means physical presence, right? Okay, so physical nexus. There are 3 different ways that we measure physical nexus with our clients. The first one is, where are you physically present? As the owner of the business or owners of the business, where are you physically located? And again, think states here. This is a state tax. This is not an IRS tax. This is state. So let's say I'm in Florida, right? My business has a physical presence in Florida. If I'm in Florida and my business partner is in Colorado, our business has a physical presence in Florida and Colorado, right? So that is the first part of physical nexus. Next thing, inventory. Where does, and specifically business property, but this, when we see e-commerce entrepreneurs, inventory is the most common type of business property that's stored out of state, right? So inventory, let's think of if you have a warehouse or a 3PL company. This does not apply to drop shippers, print on demand, or online sellers that don't own their own inventory before sale, right? So let's just say you have inventory stored in New Jersey. Your business has a physical presence in New Jersey. So understanding where you have business property is very important in understanding where you have physical presence. And for e-commerce entrepreneurs, where you have your inventory stored would be considered physical nexus. And then the third topic, and this is the least common unless you have sophisticated tax planning, is where you have employees. Now, I'm not talking about 1099 contractors or VAs. I'm talking about W-2 employees, people that receive a paycheck with taxes taken out and they get the pay stubs, direct deposit, the whole 9 yards. So that is physical nexus. So wherever you have physical nexus, that is where we perceive that you have by far the most risk for sales taxes. In those locations, you should absolutely be sales tax compliant. Okay, so economic nexus. So the indicators of economic nexus, generally speaking, because again, every state has their own rules, but most have adopted these set of rules. But the key indicators are 200 sales transactions or $100,000 in gross sales volume. And this is over the trailing 12 months, over the last 12 months. Have you had 200 sales transactions or have you had $100,000 in sales? Now, what does this mean? Let's say Utah, you have $50,000 in sales in Utah. Obviously, you don't have $100,000 in sales in that state, but let's say $50,000 in sales is, I don't know, 1,000 sales transactions. That means you had over 200 sales transactions in the last trailing 12 months. That technically means that you have economic nexus in Utah, right? And I'm not saying those are the rules in Utah. I actually have no idea what the rules are. I'd have to look it up because again, every state has their own rules. This is the reason why you are receiving notification in Shopify that you may have sales tax nexus. Okay, jumping into topic 3 here, we jumped into my computer screen. We are going to cover screenshots, and these are live versions of clients, and I've gotten the authority to be able to share this with you. Obviously, we redacted information about their stores, but these are live versions of Shopify accounts so that you can see what exactly we're dealing with here. So first thing you might notice when you log into Shopify is this message here. This looks like an ugly message, but this message here, you may have sales tax liability in 15 states. This is why we've received so many questions from our clients. If you were to click this, we'll go to the other screen here. It'll show you the states that they view you as having risk. Now, let's think back to what we discussed. This has nothing to do with physical presence. Physical presence needs to be considered on your end. What they're talking about here is economic nexus. And these thresholds probably look familiar, right? $100,000 in volume and $200 in transactions. So we're going to cover later on where you have risk, right? But this is a good cheat sheet to understand where you have economic nexus risk. And we're going to go over what we recommend that you do later. But in this example, Illinois, right? You met the state requirement for tax collection in August 2021. Your sales, this is the gross sales volume from your store, and the state threshold is $100,000. So you didn't trip up this economic nexus threshold. But check this out. you have 828 orders in this state, and the threshold is 200 sales transactions. So essentially, this business owner has probably a pretty low ticket product. So if we take this 17,551 divided by 821 orders, that means our average order value is about $21 for that state, right? So you can see here how even though you're low in terms of the volume threshold, you're over the transaction threshold. So we'll analyze this for risk, but something you need to remember, it's or, it's not and. If you trip up sales volume or transaction threshold, you have NEXUS. So technically speaking, in this example, Illinois, you have NEXUS. Even though you don't have a physical presence there, this means that you've tripped up economic nexus, and you may need to consider, technically speaking, you do need to register and collect and remit sales taxes, but for you as a business owner, you may need to consider whether or not you're going to comply in this jurisdiction. Okay, so topic 4, we are going to cover what's your risk. So we do this analysis with all of our clients, and we want to help you to understand where you have the most risk from a sales tax standpoint. So first step is physical presence. If you have a physical presence, and again, physical presence meaning where are the owners located, where do you have inventory, and where do you have employees? If you have physical presence in any jurisdiction, we view that as very, very high risk. So the reasoning is very simple. If you have owners in a state, the owners are going to file tax returns to that state. And on the tax return, it's going to say, I am an e-commerce entrepreneur, basically. You're going to have tax records that indicate you are in the business of online sales. So theoretically, all the state would have to do is say, wait a minute, Joe Schmo says he's an e-commerce entrepreneur, but he's not paying sales taxes through his business. That's an easy way for a state to catch you. So first part is where the owner's physically located. Next up is where do you have physical inventory? Now, this is again significant risk. Why? Because let's say the warehouse is audited where you're storing your inventory. All the auditor would have to do is say, what are the companies that are storing inventory here? And if your company pops up on the list, again, all they would have to do is cross-reference that with their internal list of what companies are paying sales taxes in that state. And that's a way you could get tripped up and caught. The last way is employees. So if you have W-2 employees in a certain state, that means that you registered for certain types of taxes in that state, which again means that that state has records of your business having a physical presence there. And again, if they were to cross-reference your business against their list of companies that are paying sales taxes, you would pop up on that list. So long story short, if you have a physical presence, without a doubt, you should be collecting and remitting sales taxes. So now that we talked about physical nexus, let's talk about risk with economic nexus. So what we do with our clients generally is we focus on sales volume, not so much the transaction volume. And we'll explain exactly why. $100,000 in sales in a tax jurisdiction, we view as risky. Why? Because if you have $100,000 in sales, if a state audits you, they're not going to come after you for $100,000. They're going to come after you for the taxes on $100,000. So let's say the tax rate is 8%, right? That means if they audit you and come after you, they're going to come after you for $8,000. We view that as high risk because these state tax authorities are a business just like you. Just their revenues are not e-commerce revenues. Their revenues are when they shake you down and collect taxes from you. So if they shake the tree, they want to be able to generate a lot of tax dollars. So if you have $100,000 in sales, they can generate $8,000 in sales tax revenue essentially from you. So we view that as very, very high risk, and we think that you should view that as high risk as well. Now let's talk about the other threshold, 200 sales transactions. We view this as generally speaking lower risk unless you have a high ticket product. So let's say your average order value is $50. $50 times 200 sales transactions is $10,000. Now again, if a state audits you, they're not going to come after you for $10,000. They're going to come after you for the tax on $10,000. So let's say it's an 8% sales tax rate. $10,000 times 8% is $800. Now here's the question, is a state going to audit you over $800? Likely not. Again, they're after bigger fish. They want to shake you down and get a lot of tax revenue. So we view the transaction threshold as low risk. So in terms of what's really your risk, our opinion is that you should be focused on physical nexus and then economic nexus in terms of sales volume. The transaction threshold, definitely something to consider, but it's a step down in terms of your risk level, in our opinion. Okay, and then the last topic here, what's my honest advice? So a couple of things I want to make sure you understand. The first thing is, if you determine that you have significant risk in a state and you want to comply with the sales tax laws, you have to register with that state. You have to get something called a sales tax permit, right? Think of it as like a driver's license. You need a driver's license to drive. You need a sales tax permit in order to charge customers sales taxes and then pay it into the state. Now, another thing I want to make sure you understand, because I get this is something that new clients or prospects mention to me all the time. They'll say, don't worry about sales taxes, I got it covered. And I say, what do you mean you got it covered? There's a button in Shopify that you can turn on sales tax collection. Now, what that does is you are charging your customer sales taxes. Their sales taxes are going into your account. However, Shopify is not taking those sales taxes and paying it into the state and local tax authorities. You or the business owner are obligated to do that. So just because you have that button turned on in the back end of Shopify does not mean that you are sales tax compliant. Now that we get that out of the way, let's understand where I recommend that you start to focus on when to hire someone, when to be sales tax compliant, etc. So generally speaking, if you are less than $3 million in annual sales, now this is not the same for everyone, but generally speaking, this is what we apply to our clients. If you're less than $3 million in annual sales, what we say is focus on physical presence, absolutely, right? So where you have a physical presence, again, if you have a partner, where are you located? Where's your partner located? Where do you have inventory? Where you have employees? Physical presence, that you should start to be compliant with immediately. The secondary test is economic nexus. We say if you have less than $3 million in sales, ignore the transaction threshold and focus on where you have gross volume of over $100,000 in sales, right? If you have over $100,000 in sales in a certain jurisdiction in less than a 12-month period, then that is an indicator that you have significant economic nexus risk. If you are over $3 million in annual sales, without a doubt, I highly recommend that you consult with a professional, because there are tools out there like TaxJar, and there are several others out there that are similar that will automate your sales tax process, but it's just like any other software. It's garbage in, garbage out. We highly recommend that you consult with a professional and work with a professional to stay sales tax compliant, because we view your situation as high risk, because there could be many jurisdictions where you have significant economic risk. If you're less than $3 million, again, focus on that physical presence and then the $100,000 volume threshold.